Hey, what's up guys, welcome back to the channel. In today's video I want to go over two insanely high growth clean energy stocks that just reported absolutely insane Q3 earnings numbers. I've been talking about these two stocks very much on my channel over the past few months or so, and how I'm incredibly bullish on the long-term growth opportunities in each of these plays. And today's earnings reports only further solidify my bullish thesis on both of these stocks. In this video I'm going to quickly recap both earnings results, discuss what could be next for both of these companies, and at what prices I'm planning to buy or sell each of these stocks. But before we get into it guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. The first stock up here we have is ticker symbol STEM or STEM Incorporated, which is an artificial intelligence driven battery energy storage company that just reported record revenue, record gross margins, and a record backlog of pipeline for their battery storage products. This company is arguably one of the most innovative and highest growth players in the entire clean energy transition, especially since the infrastructure bill has put so much money towards making the grid more reliable and making renewables a bigger part of our grid. And since STEM is literally one of the global leaders in providing battery storage products, I'm extremely excited about the growth potential for this company over the next few years. As you can see in Q3, they reported net revenue of around $39 million, which is up from around $9.2 million in the same quarter last year. That is an insane 300% plus growth in revenue, but even better than that, these guys' gross margins went from around negative 19% to positive 8% this quarter, which means that these guys are actually becoming very profitable, at least on their cost of revenue. And the amazing part is that this is all coming in the midst of a huge global supply chain shortage, especially for rare earth metals that are used in making the batteries that STEM sells. So just based off these numbers alone, this earnings report has definitely been a fantastic one, and as more of their revenue comes from their artificial intelligence powered software, their gross margins should continue to increase over the next few quarters. And the way the industry is headed towards artificial intelligence, machine learning, and software-based algorithms to predict energy usage, I definitely expect Athena software to be in a very high demand as the industry gets more and more dependent on solar and wind. But by far the most impressive thing out of this entire earnings report has been the fact that their 12-month pipeline and their net bookings have been growing at a ridiculous rate over the past year or so. As you can see, compared to last quarter, their third quarter pipeline is now up to $2.4 billion, which is an insane 41% increase from the second quarter. This is really big because this is not a year-over-year number. This is a quarter-over-quarter number, which tells me that there's a lot of customers that have a lot of demand for what STEM is offering. And as you can see, this is being backed up by a record $312 million backlog, which is up from around $250 million at the end of the second quarter. The basic difference between the backlog and the pipeline is that the pipeline is essentially uncontracted revenue that the company might be able to execute on in the next 12 months, whereas the backlog is basically the revenue that they haven't been able to fully realize yet, but it is fully contracted. And obviously this paired with the fact that these guys' revenue actually came in at the very high end of their guidance range for Q3 makes me very excited that this company could have a record Q4 as well. If we now move on to the chart, you can see that this stock is up over 13% in after hours trading after being down around 8% in market hours trading, which is something I don't fully understand because the overall market really didn't pull back that much. So essentially what I expect is that this might have just been some option traders cashing out or some short-term traders cashing out of their positions before the potential big move after the earnings report. And as you can see, that's exactly what happened today. We're now back above that $25 level, which is a very bullish sign for short-term traders and definitely long-term investors as well. And generally speaking, this company definitely deserves a much higher multiple and a much higher valuation because of how quickly and sustainably these guys are growing. Unlike other EV stocks, this company is not on a pre-revenue stage. This company has proper revenue and they're actually improving their bottom line as well, improving their profitability, and obviously improving their pipeline and their backlog. As you can see, we're still underneath both the 50-day and the 200-day moving averages, which basically tells me that the stock is in a great buying opportunity zone for anybody looking to invest in this business for the next couple of years. And as you can see, the RSI is well underneath 50 as well, which only goes to show that this stock is extremely oversold, and since the business fundamentals continue to improve, this is one of the best buying opportunities in the clean energy space right now. My personal price targets for this stock are well above $50, but if you're a short-term trader, I would target this $37 region, followed by this $49 resistance level that we made back in February. The next stock up here we have is ticker symbol PLUG, or Plug Power, which has become my favorite green hydrogen and hydrogen fuel cell stock for the next couple of years, because not only is the hydrogen economy expected to be one of the fastest growing industries for the next decade, but Plug Power is literally the global leader in not only producing hydrogen, but also consuming hydrogen through their hydrogen equipment. I recently made a video on this stock going over how this could become one of the best EV plays as well, especially after they announced their huge joint venture with Renault in Europe. But their most recent earnings report and their acquisition of the Frames Group has only further solidified my bullish thesis on this company. As you can see, their third quarter revenue was up 34% to $144 million. And on top of this, they raised their 2022 guidance from around $800 million all the way to $925 million. This is extremely bullish in my opinion, because this puts Plug Power on track to become a $1 billion business by 2023, which puts them well ahead of their initial timeline of becoming a $1.2 billion business by 2024. Increasing guidance is one of the most bullish things a company can do, and if we pair that with the fact that Plug announced that their service costs per unit are actually expected to go down by roughly 30% in the next 12 months or so, makes me even more excited as to how quickly this company can actually become profitable. And since these guys are expected to start rolling out their 6 hydrogen production plants over 2022 and 2023, these guys expect their fuel margin to be completely break even in the next 12 months, which means that these guys are going to be extremely profitable once the demand for hydrogen fuel increases in both Europe and America. And as we've seen, as more and more companies are investing in hydrogen fuel cell technologies, this demand is going to continue rising, and Plug Power will benefit massively. But by far the most exciting part of the whole earnings report has been the fact that these guys are potentially going to be announcing their latest joint venture with Acciona by the end of this month, which means that we will have a very nice catalyst for this stock coming up in the next few weeks. And since Plug Power has already announced amazing partnerships with big companies like Airbus and Life in Europe, it makes me very excited for what this company has in store for the next couple of years. If we move on over to the chart, you can see that the stock is down around 5% in after hours trading after being around 0.5% down for the trading day, which really is very insignificant, because at the end of the day, the earnings report was absolutely fantastic, and essentially the company missed Wall Street's estimates. And we all know that Wall Street is not very good at valuing growth companies in this space, so it does not really bug me at all that Wall Street estimates came in much higher than what Plug Power actually reported. At the end of the day, the fundamentals of the business are improving every single quarter. We're seeing these guys get record bookings, and these guys' capital expenditure over the past year or so has been absolutely insane, as they keep acquiring smaller businesses in more innovative areas, and they keep announcing new partnerships with companies like SK Group and Renault. And this is exactly what you want to see with a growing business. You want to see a lot of networking in different continents, and you want to see expansion and a use of the capital that this company ended up raising back in February. If you guys remember, in February, this company raised around $4 billion, which was really massive for a company that was only trading at around $30 to $40 billion. But now, as you can see, the stock is trading at around $23 billion, which means that $4 billion of cash gives this company a lot of leverage to continue expanding their business and not having to raise any money through dilution for at least the next 12 to 18 months. And as you can see, the market has kind of realized that over the past month or so, as the stock ran up from 23 bucks all the way to 42 bucks. I ended up buying a lot of shares in this $25 to $24 region, but obviously now that the stock has run up so much, I'm definitely waiting for a little bit of a pullback to at least this $33 to $35 region before I continue building my position and adding more shares. Now, as you can see, we might be getting that gift after the stock is down around 4% in after hours. And as you can see by the volume, institutions are definitely buying the stock up very heavily over the past few weeks, especially as we've seen crazy price target upgrades on this company from Morgan Stanley, JP Morgan, and BTIG. And now that we're above both the 200-day and the 50-day moving averages, makes me very bullish for the stock, at least from a technical perspective. If we get over this $43 level, my price targets are at around 55 bucks, followed by around the $70 level in the short term. But long term for me, this stock is definitely worth at least $100, given just how quickly this company is growing and the future of the hydrogen industry in general. But anyways, guys, make sure to drop me a thumbs up if you found some value from this video. Let me know what you guys think of Plug Power and STEM in the comment section below. How many shares are you holding, and are you planning to add the dips or the rips on either of these stocks? But anyways, guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.